Were you looking 4 or 5 years ago or before that? Were you looking for something other than what you were doing?
You know, during the COVID lockdowns in the middle of 2020, we had $500 million of cash, and the bankers took the interest rate to zero. And yeah, we were
500.
Yeah,
$500 million in cash.
$500 million, and you know, so it's like you have a $500 million real estate portfolio, and the mayor of the city unilaterally reduces your rents to zero and tells you they're gonna rent control the rent to zero for the next 5 years because that's the right thing to do because we're in a crisis, right? There's COVID crisis, and if you don't like it, then you must not be a good citizen, right?
Right.
There's something wrong with you, right? You're just insensitive capitalist, and the right thing to do is we just reduce the rents to zero forever, which is easy to do with somebody else's money, right?
Yeah.
So that's kind of what happened during COVID, right? I mean, we literally did it with rents,
yeah.
You know, and we did it with capital. So when that happened, if that were to happen to you, if someone said, I'm reducing your rents unilaterally to zero forever, and you could sell the property and move to a different state or move to a different city, you might very well do that, right? So we had $500 million worth of property. It was called Treasury bills. It was unilaterally reduced to a value of zero per year. And I think Jerome Powell gave a speech, and he said very famously, he said, we're not even thinking about raising the interest rates until the year 2024 or 2025.
Right. Repeatedly he said it.
I didn't need to hear that twice. So I thought I better go find something else to buy other than Treasury bills. So we started thinking, could we buy a stock portfolio? Could we buy a portfolio of art? Could we buy some real estate? Could I buy a fraction of a sports team? Should I buy a bunch of gold, or should I buy a bunch of digital gold? And by the process of elimination, we went through all those things.
Had you been introduced to Bitcoin prior to that?
No, not really.
Okay.
I mean, I'd never really seriously thought about it,
okay.
Right? So I went through the process of elimination, and I started thinking maybe I should buy gold, but then I thought what I'd really like is something that feels like gold, a non-sovereign store of value bearer instrument, like, you know, and I like something which is the best cross between gold and Google. I wanted a digital monopoly on money, digital gold. And I thought, well, this crypto stuff looks like it's digital gold, a crypto coin, 21 million crypto coins, because the appeal of gold is it's scarce and desirable as a store of value, and the appeal of crypto is I can teleport it, and I can self-custody it, and I can program it. So then I just started thinking, well, what's the crypto network which is most like gold? And I eventually decided Bitcoin was digital gold. And so we bought Bitcoin because, gold was the best idea of the 19th century. And arguably, if you wanted portable capital, you wanted portable property, you wanted money for the past 5,000 years, right? Gold was generally a pretty popular idea. But in the 21st century, what you'd like is something that's as desirable as gold, but you want it to be programmable, you want to move it at the speed of light, you want to put it on an iPhone, you know, and the thing about Bitcoin, which is better, in addition to being programmable and digital, was that it's absolutely hard capped to 21 million coins. And so the inflation rate of Bitcoin is zero. It was pretty obvious to me over the long time horizon, as the limit goes from zero to infinity, the inflation rate is zero.
Why is it zero?
Because there's 21 million, that's all there's ever gonna be.
Okay, so?
There's 21 million.
Yeah.
Right? And the rate at which we create more Bitcoin is asymptotically falling to zero. It's falling to zero.
What is that word?
You know, asymptotically.
That's a big word, bro.
It's like if I try to go to the wall there, and each time I move, I cut my step in half.
Okay.
And I go half as far and half as far and half as far and half as far. That's asymptotically approaching the edge of the room.
Wow.
But even over 1 billion trillion years, if I keep cutting my step in half, I'll never get there, right?
Yeah.
But on the other hand, you say, well, how wide is the room? It's like 12 feet.
Right.
Well, so with Bitcoin, you know that there'll never be more than 21 million Bitcoin. And in public company parlance, you would refer to that as the fully diluted share count. The fully diluted Bitcoin count between now and a million years.
There can't be any more shares.
It's like if you knew you were going to 21 million shares.
Yeah.
It's like when I'm valuing your company, I want to know, well, what's the total number of shares that can ever be issued between now and 100 years from now, right? I don't really care how many shares you issued this week or this month. I just want to know, are you going to 21 million shares? Or are you going to 2.1 trillion shares?
Right.
Right? And so the fully diluted Bitcoin count was 21 million. And the significance of that is that means the inflation rate's 0. But the inflation rate on gold is 2%. And the fully diluted gold account is infinite, because if I keep increasing the amount of gold by 2% a year, that's infinite amount of gold. If you want to figure out practically how you value it, well, when you increase the supply of something by 2% a year, that means that you're doubling the supply every 36 years. That means the economic half-life of your money is 36 years. That means the half-life is 36 years. That means you're going to live 70 years. Okay, well, what's the half-life of the inflation rate? 0. Infinity. So what's your life expectancy if the inflation rate is 0? Your life expectancy is infinite. You're immortal. You're living for 1 billion trillion years.
Like that idea.
0 is 1 billion trillion years. You're a god. 2% is you're going to die, half of you dies in 36 years, the other half dies in the next 36 years. Maybe you make 100 years and you're pretty much done for, right? And so it's the difference between a mortal life of a human being versus economic immortality. We can dismiss it if we just think in the next 12-month time frame. But, you know, if you're an engineer, it's like, well, what's the difference between you lose 2% of your energy every cycle versus you lose none of your energy every cycle? None of your energy every cycle is perpetual motion. You last forever. 2% of your energy every cycle, and you spend it 100 times, there's nothing left, right? You burn out the motor. Okay, so I like the idea of gold, but digital gold is better. And how much better? Infinitely better, right? Infinitely better. So in 2020, we settled on Bitcoin as digital gold. We decided we're going to sell our $500 million worth of treasury bills, and we're going to buy $500 million worth of Bitcoin.
First purchase was how big?
$250 million.
Wow, dude.
Next purchase, 2 weeks, 3 weeks later, 20 days later or something, was $175 million.
Your first purchase was $250 million. Half of your cash reserves.
Yeah, well, actually, I would have bought it all, by the way. I wanted to buy it all, but the board of directors wouldn't let me.
Well,
like my
bunch of idiots, huh?
Yeah,
I said that, you didn't. But let me ask you, how do you make a decision after years of accumulating that much fiat, that much cash?
Yeah.
How do you make a decision in a week, I'm going to drop $250 million, half of my reserves, into one investment? How do you get that much conviction that quick? Or did it take a minute?
The lockdowns hit. The politicians make us close the office. Everybody goes home. Google and Apple and Amazon and Microsoft start sniping all of our employees from home. It's pretty clear, right? If I want to destroy your company, I sentence all of your employees to home jail, right? To home imprisonment. And then I offer them 20% more to redirect their computer browser to some other company. So it's clear we're going to lose all of our human capital. The stock tanks to $9 a share, and the company's worth nothing.
This was MicroStrategy at the
2020.
time? Yeah.
Yeah, I'm telling you the story of You're asking me, how did I get conviction?
The audience, your software company.
It's March of 2020.
Okay.
We're a software company. Yeah. We're a $500 million software company. And the lockdowns come, and all of our employees get sent home, and we're losing them to Microsoft and Amazon. And so we're losing our human capital. We're a public company. The stock tanks, it's valued at half of revenue or something.
Wow.
Call it $3 a share. That's what the company's worth. And and then Jerome Powell says, well, the $500 million in capital, that's worth nothing forever.
Wow.
And our choice is either sell the company. It's like a fast death. Just sell the company, give up, write off 30 years of work. Or a slow death, cling on to $500 million of cash yielding zero, watch it get inflated 20% away a year, right? The inflation rate was 20% at that point. We're printing money like there is no tomorrow. Costs are, you can't see the inflation in 2020 because it's illegal to buy anything, right? When there's a war and the government doubles the money supply, but it's illegal to buy anything, you don't see the inflation. You see the inflation after the war ends when when you can go buy an airplane ticket or go to a concert or try to go to a hotel, and at that point everything doubles or triples in cost, except you don't have any money, right? Because the government doubled the money supply. So it was pretty clear to me that the currency was collapsing, and we were going to have all our human capital stripped away, and we were, having all of our financial capital stripped away. And, I think the stock traded $1 million a day. Like no one cared at all about the company. And we're either going to basically sell the company, give up for, $8 a share, $10 a share, or whatever, or we're going to cling to life for 5 more years, at which point all of our employees will have quit. The product won't be any good anymore. We've just had all of our talent stripped away from us, and then the world will say, well, they went out of business because they deserved to go out of business because they couldn't compete with the big guys, or we could do something. We could take a risk. So it's that point in the movie where the guy's sitting in the Citadel with an army, and he sees there's a war, and there's the War of the Roses, and there's there's the white faction, and there's the red faction, the Yorks and the Lancasters, and you're either going to sit there and get starved to death by both of them, or you're going to pick a side, and you're going to ride out and you're going to fight. And if you win, maybe you get to live, and if you lose, well, at least you went out fighting, right? And so that was where we were at in 2020, and we decided it's either a fast death or a slow death or fight. And I thought maybe I would prefer to fight.
So you thought at that time, buying $250 million worth of Bitcoin in one day. Had you bought any up to this point at all?
No, I mean the way we got there.
Bitcoin?
No, nothing.
Nothing.
No, I mean,
crazy.
Look, it didn't happen in one day. What happened is I concluded by April that this was a way out. Bitcoin was growing 80% a year at the time. So if you can buy something appreciating 80% a year, that's a commodity on your balance sheet.
Faster than your company.
It's like, if you could buy a digital monopoly growing 80% a year at 1 times revenue, would you?
Yeah.
Of course you would.
Yeah.
If you could buy a digital monopoly growing 30% a year for the next 20 years at 1 times revenue, would you? Everybody would. It's not a complicated idea. I expect Bitcoin to grow 30% a year for the next 20 years. It's a monopoly. You're getting it, you buy $100,000 worth of Bitcoin, you're getting a $100,000 business growing 30% a year. That's a monopoly at 1 times revenue. Why wouldn't you? Everybody would. The breakthrough was just thinking of it as doing a acquisition of a digital monopoly on money, right? It's the dominant digital monetary network, right? So we have to do a transformational acquisition. And
to survive.
And since there's no other company growing 80% a year that's available at 1 times revenue that'll sell themselves to us, Bitcoin was the deal, right? Bitcoin
no
was
employees.
So we looked at it and we thought we can buy the dominant digital monetary network at 1 times revenue. It's growing 80% a year. On paper, it looks just fine. It's just no one ever done it before. But the theory isn't that complicated. I mean, what did Facebook pay for WhatsApp or for Instagram?
WhatsApp, yeah.
WhatsApp. I mean, think of what did Google pay for YouTube?
Yeah.
Okay, so it's not a complicated idea. You buy the monopoly,
Yeah.
something that 1 billion people need, nobody can stop, that's in hyper growth mode, that'll sell itself to you cheap. Why wouldn't you?
Yeah.
So that wasn't the problem. The problem was no public company had ever done this before.
Right.
And so first I have to convince the officers of the company. Then I have to convince the board of directors of the company, right? Now, and that takes a while. And then the logical thing is, let's just go ahead. We're going to bet the company on this, buy 500 million worth. But, between the lawyers and the risk managers, everybody thought, well, that's too risky. So let's do I said, well, what about 400? I'll do a buyback. 400 million of Bitcoin, I'll buy back 100 million of stock. No. 350 million of Bitcoin, I'll buy back 150 million of stock. No. 300 million of Bitcoin, I'll buy back 200 million of stock. No. Okay, here's my best and final offer. 250 million of Bitcoin, and I will buy back $250 million of the stock in the open market, the tender offer. Okay.
So explain that to me. So
when we announced the deal, what we said was we're going to buy 250 million of Bitcoin.
Yeah.
And we're launching a tender offer. The stock was 120 bucks a share. We'll buy you out at 140 bucks a share if you don't like the idea. So we basically said...
Who funded that?
The company. The company had $500 million.
Got it. Okay.
And the company said, we're going to buy back.
I'm a real estate guy. You got to remember, I'm a real estate guy, dude. It's like, to us, it's like, I got to see it, I got to touch it, I got to feel it. So you got to go slow with it.
I'm the CEO of a public company.
Okay.
And I want to do something very risky.
Got it.
But you're the outside shareholder, and you think I'm crazy.
Right.
So I say to you, I'm going to go bet the company on Bitcoin, but if you don't agree with me, I'll buy you out your shares.
Got it.
And so I'm going to offer you $140 a share.
$20 premium.
Yeah. If you want to get off the ride.
How many people took you up on that?
So the way it worked is we announced the 250 million in Bitcoin, then we had a 20-day tender period. We made a tender offer. We offered to buy up to $250 million. The stock traded up, and then it traded above the $140 price, and everyone that didn't like it sold into the open market at north of 140.
Wow.
When the 20 days finished, we had $60 million worth of shares tendered. We paid off the $60 million of shareholders at 140. We had about $175 million of extra cash at that time. We turned around and bought Bitcoin with that. So the first deal was 250, and that second deal was after the tender offer. It was the extra 175 million, and then Bitcoin rallied, the stock rallied, ran through the roof, and the rest is history.
So Bitcoin was what price then? Do you remember? I'm sure you do.
When we did the first deal, we bought Bitcoin, and we bought it at like 11,800. Okay.
And you just banged the bell, right? You just hit it?
No, then immediately Bitcoin crashed down to 9,600 or something, and we lost $40 million in the next 2 weeks.
Oh my God.
And so
what's going on for you when that happens? Because that's what happens every time I buy it. It drops 20%.
It's an instructive story because the point is it was never easy. It will never be easy. And if you were buying expecting to get an immediate risk-free return in the next 2 weeks, you have the wrong attitude. So we bought it, the price crashed, we went through with the tender offer, we got 175 million, and we went and we bought the next tranche at 10,200 or 10,300. So we doubled down after the dip, and then it turns around, flies through 12,000, runs to all-time highs of 19,000. The stock 10x's.
Yeah.
All the stock options get exercised. We get another wall of money. We buy another $50 million worth.
Well, where's the wall of money come from? Explain the wall of money. It sounds sexy.
The company.
Explain to me the wall of money.
All the employees had stock options. And the stock options were. The stock options are, struck at whatever, 190 bucks, 80 bucks. This is pre-split. The company eventually split 10 to 1. So if these numbers seem different to you, that's because we split it 10 to 1. But so the stock options are whatever, 80, 90, 100, 110. When the stock's trading between 90 and 120 during the lockdowns, the stock options are worthless. When we bought the Bitcoin and Bitcoin rallied, the stock went through the roof, rallied up to 200, then $300 a share, then $400 a share. When the stock rallies, all the employees exercise the stock options, and the company gets an avalanche of money from stock option exercise.
Got it.
And so all of a sudden,
they're buying the shares at 110.
No, the employees are selling the shares.
They're selling the shares.
Well, they're selling the shares at 400, and they're exercising the option, which means they're buying. They're buying the stock at 110, and the company's getting...
Got it. The company gets the 110.
Yeah, so the company generated a lot of stock option income because the stock took off. And so we bought another tranche of Bitcoin. And the volatility spiked, the liquidity spiked, the stock went through the roof, and by December of that year, we were able to do a $650 million convertible bond offering at 75 basis points interest cost. So basically free money. Yeah. So someone gave us $650 million of free money by December, and by February we did $1 billion deal at 10x. The strike price was $1,400 a share. Remember, the tender offer was $140 a share.
Right.
So we did a convertible deal at 10 times the price of the tender offer, maybe 6 months previous, or the tender offer was in September. So
where did you learn the financial engineering part? Like, I know you're an engineer by nature, okay? You're a very intelligent guy. You studied history. But where do you, every time I'm with you, dude, I'm just like, where did you start seeing this? Did you look a lot? Did you study?
I took the company public in 1998. And so I'd been a public company CEO for 22 years by the time we went into this.
You were how old?
Well, when I took the company public, I guess I was 33.
Okay.
Yeah.
Jesus.
I started the company when I was 24.
Yeah, okay.
So I started when I was in 89. I was
Wow.
24, and then we were a private company from 89 till 98. And at 33, I took the company public, and then I lived through all sorts of...
You went the IPO route.
Yeah.
The route, what do you call that? The rite of passage?
I guess you could call
that's
it
what
that.
you told me it is.
Yeah, and I'd had experience as a private investor, and so I invested in all these big tech stocks, and I made fortune. I made a lot of money investing in Apple and Amazon, like 20x my money in all the big tech things, and I had a vivid recollection that I'd worked myself to death, like 3,000 hours a week for 10 years in my business, and I couldn't get ahead. We were basically banging our head against the wall against Microsoft. But 1 hour a month, I would invest in Google or Apple or something, and I was making a fortune, and it was easy. And I started thinking, if I had it to do again, I think I'd take the company money and invest in the big tech stocks, because then the shareholders would all get rich, because simply working harder to compete with Microsoft is not a way to get ahead, right? They're just too powerful. You cannot compete against the monopoly of the world. So I had that experience. I had some experience trading swaps and currencies and other things. So I had an intellectual interest in these things. But really, necessity is the mother of invention, Grant. It's like when someone tells you, I got some bad news. It looks like you're going to die of something. You've got 12 weeks to live. You all of a sudden get religion, and you start, you go online and start interrogating the AIs. You start arguing with the AI about whether this is right or wrong. And someone says, maybe you might want to change your diet. And the thing you dismiss for 50 years, you think, maybe I might want to change my diet.
Right.
So I think you get open-minded when you have this near-death experience. And what they say in the history of science, and one of my degrees at MIT was the history of science, they say the only time you ever see a paradigm shift is either when the old guard dies, like people that think they know how the world works just have to die, just have to get out of the way. Max Planck said science advances one funeral at a time, right? And then the other time when there's a paradigm shift, when people embrace a new idea radically, is during a war, right? War on COVID, World War II, someone's dropping a bomb on your head, and you're an aircraft denier. You don't believe in air power, right? You don't believe in nuclear power, and they drop an atomic bomb on you. Okay, so a lot of things that people rejected. We literally court-martialed Billy Mitchell, right? Like the military court-martialed the guy that said, the Air Force is important and airplanes are important. Yeah. The Army court-martialed him, right? I mean, Pearl
You think
Harbor.
COVID was a war?
What?
You think COVID was a war, or equivalent
It's
to a war?
absolutely a war.
Yeah.
There are 2 wars going on.
Yeah.
Right? Maybe 3, right? There's a war in COVID, technically, right? That biological war. There was a cultural war, right? There's a cultural war. The war when we shut down every small, mid-sized business and bankrupted gym owners and restaurateurs and bar owners and everyone that worked with their hands in the blue-collar labor
100%.
while we enriched Wall Street and hedge fund managers, right? Everybody on Wall Street had the best year of their life, and everyone that actually was a blue-collar laborer, not only were they bankrupted, they were thrown in jail for showing up to work. Right? Had their reputations destroyed, their accounts frozen, et cetera. There's definitely a cultural war there. You still can't talk about it, right? Right? It's still very difficult to talk about. And then you had a currency war, a war on the currency, right? When you basically determine that the interest rate is going to 0, You're inflating the currency through the roof. You're devaluing someone's assets, right? I am devaluing your currency. And of course, all of the derivatives of the currency. So there was a currency war as well. And if you didn't notice it, right, you must have been in a coma for the year. I think everybody noticed it. And the issue is, how did people react to it, right? And everybody's got their own story of how they reacted to it. But I think it was pretty transformational to a lot of people in the world.
When did you know you were right? How long before you're like, okay, this is going to be a new industry, not just a surviving business?
By October of 2020, we launched that tender offer August 10th, August 11th of 2020, and made the second buy in September. And right around the time that PayPal announced support for Bitcoin, and then when Square came out and they bought Bitcoin, and then Bitcoin rallied into the teens and ran toward the all-time high, and our stock rallied, it was clear we'd saved the company. And and it was a gambit that it worked out.
When did you know you were creating an industry? I mean, obviously,
what happened was our journey was, we started out of desperation and frustration, right? I would say Q2, Q3 was desperation and frustration. You fight or you die. And then I think we moved into opportunistic phase. It became opportunistic. Hey, someone will give you $1 billion for free for 7 years to invest in your business. Do you want the money? Of course I want the money.
Yeah, of course.
Right? Okay, so it became opportunistic. And then at some point we realized there weren't very many public companies. Being a public company that's a well-known seasoned issuer with an options market that can actually issue bonds and sell equity to buy Bitcoin made us a very unique creature, so it became strategic, right? There are a lot of people I meet even today, and they go, well, I had money locked up in a 401k back in 2020, and I believed in Bitcoin, but I couldn't buy any, and then you came along, and so I could buy your stock, and I made a fortune, right? People in the UK had money locked up in a retirement account. People in the US, a lot of people, they could buy an equity, but they couldn't buy the underlying Bitcoin. And if you bought our equity, you could use money tied up in a retirement or IRA account. You could borrow against the shares. You could trade the options on the shares. And then we created these convertible bonds. And if
this is 21 now.
Yeah, well, actually starting in 2020.
Okay.
Right. I mean, if you believed in Bitcoin in September of 2020, you can't buy Bitcoin.
I couldn't because
your money's in a retirement account.
And the Merrill Lynch wouldn't allow me to.
Even today, you can't buy Bitcoin from a retirement account.
Oh, really?
5 years ago.
Oh, I didn't know that.
Go try it.
Oh, okay.
Yeah, you can't. You can't buy a crypto asset in a regulated retirement account in Australia or the UK or the US, for the longest time. So a lot of people had a lot of capital tied up. Even if your money was freely yours, you would then have to go and set up a relationship with a crypto exchange. That would take you 6 weeks to 12 weeks. Then you would have to wire them the money. Then you would have to buy it. It was very difficult. And even if you did it, let's say that you actually had money that was free and clear and you set up a crypto relationship. So you put all your money into that, but you can't borrow against it, right? And so we became
virtually illiquid.
We were an institutional on-ramp for people. Right, you can borrow against MSTR, you can buy MSTR, you can direct your retirement funds into MSTR, you can, by the way,
you didn't have this story though. In 2020, you didn't know this would happen, right?
No. No, I didn't know.
Yeah, right.
I learned it. It was a fortunate happenstance, a serendipitous development, right? I didn't know all those things. All I knew was we're going to die unless we fought.
Right.
And so your back is against the wall and you decide, I'm not going to roll over and die. I'm going to fight. What came out later was we became the largest issuer of convertible bonds in the world, and we had the most valuable convertible bonds because they're backed by Bitcoin. And so that was a lucky find. That was worth $10 billion to us. And then it turns out there was no ETF. IBIT didn't exist until 2024. Any Bitcoin-backed ETFs didn't exist. So for 2021, 2022, 2023, 2024, There were no ETFs, and so we were the equity on-ramp for people, and that was another fortunate happenstance. Then it turns out that people, all the derivatives traders, want to trade in the options market. You want to buy calls or puts or whatever. Well, we ended up going from a $1 million open interest to a $100 billion open interest. Okay, $100 billion makes you like one of the 10 biggest options markets in Wall Street. So I didn't know that was going to happen. It didn't occur to me. But because we were a company that had been public since '98, we're a well-known seasoned issuer. So the options immediately came to life. We could issue the bonds. We could do the financing. Our equity became liquid. You could borrow against it. And so we inherited all of the financial apparatus of a Schwab or a JP Morgan or a Morgan Stanley. And we could, our security could be bought in, UK retirement accounts. So we got a bit of a benefit there and a head start by being the pioneer.
Right.
When the ETFs got approved by the SEC.
This year?
In January of 2024.
Okay, last year.
Yeah, when they got approved, they were crippled by the SEC. The options markets on the ETFs were crippled. You could only trade very small amounts of options contracts. And so we still were the dominant derivatives on-ramp and off-ramp for the entire crypto economy, right? Like at one point, we were like $100 billion, and the next closest thing was $10 billion. So we were 10 times bigger. And,
wow.
and our stock was trading 3, 4, 5 billion a day, and that was twice as much as everything else combined.
3 or 4 or 5 billion
a day.
Dollars?
Yes, $3 billion. And $3 to $5 billion of MSTR trading every day.
And prior to that, what were you trading? Before you
in February of 2020.
Yeah.
$2 million a day.
Oh my God, $2 million
a day. Yeah. We went from 2 million to 4 billion.